So when dealing with insurance companies, it's very important to stick to your guns. Once you evaluate the case and you put a value on it, send them a settlement opportunity letter. For example, if you think the case is worth $1 million, tell them, pay $1 million, you have 30 days, inform your policyholder. If you don't pay the $1 million within 30 days, we're going to go to court. But we're not going to be asking for that $1 million anymore. Now we're going to be asking for at least $5 million or more. That'll be the minimum amount that we would accept if we go to court. And so the insurance company, remember, they set reserves on your case. The reserve is the highest amount that they think they would ever have to pay in the world of worlds, right? In all possibilities. And that reserve might only be $3 million. So when you tell them, hey, my settlement opportunity is 1, if they don't pay you the 1, well then you're going to go to court and they expect it to resolve for 3 or less because that's the amount that they set aside in the reserve. But now you're saying 5, and that causes chaos, and that causes them to go crazy because now you're blowing up their world. You're messing up how they want to manage risk. They want to manage risk. They want to control risk. All they care about is their financial position. They are financial companies. Many of them have stocks, right, on the New York Stock Exchange or NASDAQ, and that's what they care about. So this is very, very effective. But what you have to do, and this is the point of this video, is stick to your guns. You can't say, I'm going to take $1 million within 30 days, and then let's say 6 months goes by, and they call you and they say, well, now we have the $1 million. No, that train has left the station. Now it's $5 million. You have to stick to your guns. Essentially what it is it's almost like both you and the insurance company are in cars and you're driving toward each other, right? And then it's going to be a head-on collision. But nobody wants that head-on collision. So somebody, either you or the insurance company, is going to have to swerve. And so you just have to believe in your case so you're not the one who swerves. You have to believe in your case so much that you're willing to go to trial and get that verdict from the jury. Now, that verdict could be a plaintiff's verdict where they allow for $5 million, $10 million, what you intended. It could be 0 verdict, or it could be somewhere in the middle. But you can't really be thinking about the result. You just have to be thinking about the process, thinking about doing the best in the trial so you can obtain the #1 result. So you can't really be worried about the result. And so what I like to think of it is this, like if you're in that car and you're driving and the insurance company's in the car and you're both heading toward each other, one of you is going to swerve. So before you hit that gas pedal, what you have to do is take the steering wheel of your car and throw it out the window, right? Break it off and throw it out the window. Now you're not the one who's going to swerve. You're just going, and you are going to get that jury verdict. And then you can't lose because the insurance company will swerve. They will be afraid of a lawyer that is passionate, of a lawyer that prepares his files 100%, of a client that is prepared and tells a compelling human story. And you're going to get that, either the settlement will be much higher or you're going to get that jury verdict from a jury at trial. So I hope this has been helpful, but this is the way to prepare your cases and get the best results.